It's about that time of day again. My name is Joseph. It's Monday evening, April 24th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX tonight. Crude is bearish with a spike in range this evening, and there's one specific price level on the chart that we have to watch closely tomorrow. We'll take a look at that in just a moment. S&P is bullish with a spike in range as well tonight. Big gap up over the weekend. We have three scenarios we're watching tomorrow for the Emini S&P. Gold started the session bearish, but two clues in the chart are telling us to look for short-term buying opportunities for a possible overnight gap fill tomorrow. More to come on the yellow metal here in a moment. Euro's bullish, trying to finish an easy end-of-month target, and a triangle on the chart on the euro tell us exactly where and where not to be trading in tomorrow's session. And of course, we can't forget about the FDAX. The DAX is bullish with a runaway market today, and one simple clue tells us exactly where to be looking for the best buying opportunities for tomorrow. Hope you guys had a great weekend. We had some fireworks to kick off this week. Got a great newsletter in store for you guys and gals tonight. Big opportunities setting up for tomorrow's session. But before we jump into those charts, though, I do want to remind you the only place to watch the full-length version of this video is on our blog here at Sideways Markets. If you're watching the video right now on our YouTube channel, not to worry. It's only a small snippet on the YouTube channel. Not to worry. Go into that description of the YouTube video. Follow that link in the description, and that link will take you over here to the blog at Sideways Markets for the full-length version. While you're here on the blog watching the full-length version, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on my many social media channels, lower left-hand corner. You can follow me on social. I'm always posting important charts, links, and updates throughout the day. Grab those social media feeds in the lower left-hand corner. And don't forget to grab those charts right below the video tonight. Download those charts. Have them ready on your computer. How easy is that? All the charts from tonight's video. That's right. You can have them ready on your computer by following that link on the blog at Sideways Markets. In the upper right-hand corner, make sure you grab that free pass. If you're not a member here at School of Trade, you got to grab that free pass. You're going to learn more with me in 90 minutes on that free pass than anywhere else on the interwebs. I can guarantee you that. And also, don't forget, if you're brand new, we get a great frequently asked questions page on our blog. All right, let's not waste any time here tonight. Appreciate you guys sticking around with me here this evening. Let's take a look at the schedule for tomorrow, and let's open up those charts and get that strategy plan for tomorrow's trading session. First of all, tomorrow is Tuesday, April the 25th. We have a little bit of news tomorrow, not very much as you can see here. A lot of the reaction, of course, from the election in France over the weekend will likely be dominating headlines again tomorrow. But as far as major news goes for tomorrow, really the only news on the entire schedule is the new home sales number at 10 a.m. Eastern time tomorrow. Nothing here overnight. We got nothing here tomorrow in the ECB. Again, we'll probably continue to see a little bit of the, overflow, a bit of the backlash of what we saw from the headlines from over the weekend, the election in France. But really the major news tomorrow, the only news tomorrow is down at 10 a.m. And of course, that being the new home sales number. So make sure you mark a calendar for that, right? 5 minute buffer around before and after. And of course, don't forget, we'll be in our trade room tomorrow morning at 8 o'clock Eastern time, and we'll execute this plan right along with you guys. Looking forward to seeing you there. One thing we are watching right now, though, one thing to keep in mind out this week is we are working our way into the end of the month, right? This is kind of a convenient end of the month here. End of the month is on Sunday, which means next Monday will be, can you believe it, the 5th month of the year, already May 1st, next Monday. We'll talk more about that, and we'll get our Cinco de Mayo plans brewing later on this week. But the most important thing, though, is as we go into the end of this month, we always say, right, end of the week, look for last week's levels, end of the month, look at last month's levels. So once we're going into the end of the month, we start watching and see where we have some of those prior month, those prior month highs and prior month low levels, right, that we'll start using as price magnets. We got a couple of those on the chart tonight. Watching those, we'll talk about more of those in a moment. But again, two things to worry about for the schedule. First of all, tomorrow, only really major news other than the continued reaction to the election over the weekend, right, is the 10 a.m. new home sales number. And again, we're watching the end of the month. As we go into the end of the month, we do expect to see increased volatility, increased opportunity, and we're definitely watching to see those prior month levels, right? So tune in for the rest of the week here, and we'll keep an eye on those. With that said, let's not waste any time. Let's jump right in here. We got crude, S&P, gold, euro. We'll do some FDAX tonight. We get the whole kit and caboodle here for you guys this evening. Crude is bearish with a spike in range to finish off today's session, telling us to look for selling opportunities up above the range high for a target going back down to retest the low. Now, one thing that stands out on this chart is that we ended the session right at last week's low, telling us that sellers completed their objective from last Friday's big sell-off, and then we gotta be careful trying to sell new lower lows tomorrow. As we can see here, if you recall, look left a little bit here for me, right? Look left here. This is where we were at the end of the week last week, right? If we recall, had this big drop down to finish off the week on Friday. Of course, with such a big drop down, we see some profit taking, a short covering rally, and we know that if buyers can't hold this pullback, buyers can't hold that pullback and keep going, right? We know the odds are very, very high that we're going to go back and retest that low. So here we are now, right? As we always expect, big, strong bear market, little trap high, a little two-legged correction, sell it back down to retest that low. Here we are now, back down at that low. That's a really big clue. We're obviously bearish right now, but the fact that we stopped literally on a dime here right at that prior Friday low, which is also the prior week low. It's also a double down there at 49.12 as well. Market is obviously bearish, but we have to see this as being a very, very important sign that sellers got what they came for. And now we're going to have to incentivize them with better prices to sell more tomorrow. Really, another clue on this chart is this spike and range. You know, it's really a spike and triangle, but a spike and triangle is pretty much the exact same thing as a spike and range. Mark the high, mark the low, and look to fade the edges. Most important thing whenever it comes to a spike in range, we're going to see a couple of these, couple bulls, couple bears. When you see a spike in range, though, you want to be thinking mark up the high, mark up the low, use the directional bias on that spike in range. For example, in this example on crude oil, it's a bear bias going down, and really what your goal is two scenarios. Ultimate goal is I want to sell high. So I can sell high up here, price goes up and back down, or I can sell high down here. Now, how do you sell high by price going lower? Well, the answer is a strong move low, and then, right, the chance to sell high from there. So two real scenarios you want to be thinking about when it comes to a spike and range. And a spike and range could easily be a spike and triangle. It could be a spike and range, a true range, or a triangle. You know, the bottom line, though, is a strong move that doesn't make new highs or new lows from there, right? We'll call that we'll call it a spike and range. Again, could be a spike and triangle, could be a spike and trading range. With that said, I want to look to sell above the high of that range, or see a very strong break through the low. That's the key, right? If it breaks down to the low, right? Break down low so we can sell high from there. Remember, that's always the goal. Sell high, don't sell low. So if it does go low, it's got to go low real strong, and that way we can, of course, right, sell high, relatively speaking, right, to where the price went lower. So with that said, here's that spike down, right? Here's that trading range out. Mark the high, mark the low, and now you know what we're looking for, right? So there's your trading range. I would love to see this price go up so we can sell it back down, or right, go down so we can sell it back, right? Sell it back up, right? Sell it high. Now, two scenarios you want to be looking for here is obviously here we have that trap high here, right? Little trap high, right? Little buyer failure. Breakout, buyer failure, right? Buyer failure, trap high right back down. It may happen to push a little bit higher here. You know, we may see the bulls take short-term control and then give it back. You know, the bulls may take short-term control, right? And then give it back, and we can sell it, right, as it drops back down afterwards. So there's a bunch of different scenarios we can use to sell high tomorrow, right? On the way lower, though, there's really one that I really like. As we go lower, I want to see a strong breakdown, strong enough to get that moving average outside of that low. I really want to see a strong breakdown, strong enough to get that moving average below. Then what you want to see is, I like to call this a two-legged correction or a two-legged pullback, right? And it looks like this. There'll usually be a trend line involved here. Usually be some sort of trend line as it goes higher here, and we can use that trend line now, right, to be a seller, right, to be a seller up at that level of resistance. In other words, we can sell high, but using that strong breakdown to create that value, right, to create that comparison. You can't sell high if it barely breaks down. It's going to be a real strong breakdown. We also want to make sure we avoid, right, this no trade zone right in the middle of this range. That area is going to be a no trade zone because it's right in the middle of that range, right? So get it up, sell it back down, or get it down, right? And then again, two-legged correction, right? Sell it high, make sure you get that strong breakdown from there. Always get this question every evening. How does this market turn bullish? Good question. First thing would be we'd have to see a nice strong bull run higher, and they'd have to hold a pullback. If we can see a strong move up and then buyers hold a pullback, that's all we need for this market to turn bullish. It doesn't take a lot to turn a market bullish. It just takes a strong move, right? New higher high, and then hold a pullback. When I say hold a pullback, don't just bounce off the moving average, right? But actually pull back. Let me see buyers buy that pullback, and then show me some new higher highs. If we can get a strong move combined with a successful breakout pullback, we'll gladly call this a bull market tomorrow. And of course, their objective will be up to retest that high at 50.22. Probably taking a pit stop right up there at $50 a barrel, right on the way up. Just take a potty break, right? So we know we definitely have potential here for a big move of the bulls, but we got to wait for more proof before we go trying to buy it. Sell high, don't sell low tomorrow. Don't forget, you can always go back and rewind this video if you want to learn more about this. And also, please don't forget, I teach all the technicals of this inside of our intermediate class, right? And we teach all the entry triggers, all the setups inside the advanced, right? So getting in and getting out of trades, right? We'll talk about more of that in our advanced trade room sessions. Let's keep going. Over from crude here now to the S&P. The S&P is bullish with a massive spike in range this evening. And this trading range tells us to buy the low, take profit at the high, and look for a two-legged pullback to buy a successful breakout to new highs tomorrow. Now we're going to piggyback a little bit on what we talked about on crude oil. Got to zoom out a little bit on this one. You got to really zoom out pretty far on this one here. And you'll notice kind of the way that I drew this chart up. I put this big green rectangle here, right, as it goes up, just to kind of make sure I illustrate for you that whenever we see a big gap like that, it's thought of as being one big green candle. Now, those big candles, when they fail, they'll fail pretty darn quickly. So that's one way of looking at it, right? Gap fills do happen pretty quickly. We're going to wait for more information on that, but that's always a big, strong green candle, in my opinion. When I look at a big gap up, I see a big green candle on the chart, and then of course we can see here from here, right, into our trading range. This is that spike in range that we talked about earlier. This time there's a bull bias to it. Right, price is bullish as the market pushes higher, right? That bull bias. And then, of course, we know that now we want to look for two opportunities here to buy low. I want to buy low below that range, buy low below the range. And just like we mentioned on crude oil, right, you can buy low above the range, but what? We got to see a strong breakout and then that two-legged correction from there. So let's drill down. Let's drill into right below that range low and, of course, above that range high. And we can take a closer look at what these opportunities may look like here for tomorrow. With that said, there we go. Let's zoom in a little bit closer here. Now, as the market, let's go lower first here. We have a measured move. AB equals CD, so that's acting as support down here at, we'll call that 63 even. I apologize, that decimal place there, 23.63 even. So obviously we'd love to see this price come down, trap low, back up, or a seller failure, down, seller failure, buy and back up. One of my favorite ways to be a buyer in a bull market is to get those sellers trying to hold that pullback. If they fail, right, we can then be a buyer going right back up into that trading range, right? So getting it down below that range, failures and traps so we can buy this market back up into that range. And again, we'll talk more details about the specific entry techniques in our advanced classes here at School of Trade. With that said, right, it may take even more, right? It may even go a little bit deeper here. Maybe the sellers take control here, right? Maybe they, guys and gals, I want to thank you so much for tuning in tonight. Don't forget, if you're watching the video right now on our YouTube channel, there's a link in the description of that YouTube video. Follow that link. Join me on the blog and watch the full-length version next time. If you're here on the website here at School of Trade, don't forget, join me at schooloftrade.com. Join our free trial. Learn more about what it means to be a member. You're going to learn all about the technical analysis setups, the entry triggers on that free trial. Join that free trial. You will not be disappointed in that. Definitely a week of your time well invested. And while I get a few more seconds, don't forget, grab that beginner, intermediate, and advanced levels of membership, what I call our 3 steps to success, right? Our professional trader transformation. Guys and gals, I've helped thousands of traders do this the right way in my teaching career. I'd love to help you as well, right? Grab me on live support if you have any questions along the way. I'll be with you guys tomorrow morning in the trade room, 8 o'clock Eastern time with all of our advanced members. If I don't see you then, same time, same place tomorrow as we wrap up this great month of April. I'll see you guys then, guys. Adios, amigos. Bye-bye for now.